We move now to consider the law of charities. These are public trusts, and the references in the textbook and casebook are pretty well what I'm going to follow. The consequences of charitable status are many and varied, and it might be thought that from a policy viewpoint they tend to conflict. However, the public nature is all or nothing. You take all of it, and all of these consequences attach to charitable status. Thus, for example, because charities are publicly enforced by the Attorney General, there is no need for them to satisfy the beneficiary principle, certainty of object requirements, or perpetuity requirements. Thus, purpose trusts, which would be invalid as private purposes, can be valid as charities, and this is one of the issues that sometimes arises. We have already seen this in Re Shaw. This was, if you remember, the Alphabet Trust case, 40-letter alphabet, which was invalid as a private purpose trust, but most of the argument in that case was about whether it was charitable. Had it been charitable, it would have been a valid trust. As you may recall, it was challenged successfully by the next of kin. The next case, which I'm going to call YCN because I can't pronounce it very easily, was about ancestor worship in Malaysia, which failed as a religious charity. The other two cases, Re Pinion and Re Kepler's will trusts, were argued as educational charities, succeeding in the first and failing in the second case. All of these have in common that the issue was the validity of the trust. If it was charitable, it was valid. If not, it was not. Another consequence of charitable status is that if a charitable purpose fails, or a charitable unincorporated association comes to an end, the funds are not returned to the contributors or to the members of the association, but instead go on a CPRE scheme. Now, a CPRE scheme is administered by the Charity Commission and effectively devotes those funds to another charity as close as possible to the existing charity whose purpose has failed. We saw this in the Gillingham Bus Disaster Fund case reported in 1958. There, you may remember, a non-charitable purpose failed, and the funds were held on resulting trust for the contributors. Not a particularly convenient solution, because it was very difficult to find all of the contributors. It was argued in Gillingham, however, that the purpose was charitable, and this argument failed. Had that argument succeeded, this aspect of the case went to the Court of Appeal, had the argument succeeded, then the funds would not have gone back to the contributors, but would instead have been held on a CPRE scheme. Another case that we have come across in the past is Re Holborn Aero Components Limited, another unincorporated association case where the funds were claimed by the members of the association, successfully claimed, because this was not a charity. You may remember that this was the fund that was set up after air raids on Coventry during the Second World War for employees of a company who were made homeless by the air raids. But in Holborn Aero, the charity commissioners argued, unsuccessfully as it turned out, for a CPRE scheme. Had the fund been a charitable purpose, then the charity commissioners' claim would have been successful, and the money would have gone CPRE rather than going back to the contributors, as actually happened in this case. Of historical interest today is the Mortmain legislation, which was in force between 1736 and 1891. This prevented testamentary dispositions to charities from being valid, and the reason for the Mortmain legislation was to protect the interests of what was termed the legitimate heirs, the people who might be expected to receive family property in cases where that property was left to a charity. Now, though this is of historical interest, there is no doubt that the Mortmain legislation impinged upon the development of the law in the 18th and 19th centuries, the courts being far more willing and ready to declare a purpose a charity than they would otherwise have been, not for the purpose of validating a disposition, but on the contrary, for the purpose of making that disposition void. An example of the operation of the Mortmain legislation is Thornton and Howe in the middle of the 19th century. This case concerned the writings of one Joanna Southcote, a Christian who believed that she was pregnant with the second Messiah and had built up a substantial religious following. A testamentary gift of land to her following was held to be void under the Mortmain legislation as a charity for the advancement of religion. There, the wide view taken of religion did nothing to benefit Joanna Southcote. On the contrary, because the trust was charitable, it was caught by the Mortmain legislation and thus was held to be void. Charities also enjoy quite substantial tax advantages. We've already seen this in cases like the Broadway Cottages Trust case, where, had the gift been valid, it would have attracted tax advantages. And similarly, in Vandervelde against the Inland Revenue Commissioners, and notice that the Inland Revenue Commissioners are a party in both of those cases. Naturally, as from a policy point of view, this tends to lead to the courts wishing to narrow the law to reduce the tax advantages to such associations and purposes. This led Lord Cross to bemoan in Dingle and Turner, reported in 1972, that the tests for validity and the tests for tax advantages were the same, that is to say, one test of charitable status. The point being that the court might be very willing to extend charitable status in order to render trusts valid, whereas of course it would prefer to narrow charitable status where the issue is whether tax advantages can be gained. Unfortunately, or perhaps fortunately, whatever Lord Cross's view in Dingle and Turner, the reality is that there is one test, and all of the consequences we're now considering follow from that same test. Charities can also claim rates advantages, as was claimed in the South Place Ethical Society case and in the Freemasons case, both of which failed, as we will see, as religious charities. Had they succeeded, then they would have claimed rates advantages. This would now be relevant to the standard business rate on properties. We should remember that charities are publicly enforced. They are also publicly controlled by the Charity Commissioners, or now, with the coming into force of the Charities Act 2006, the Charity Commission. Again, we've already seen this in Neville Estates against Madden, where the purpose was held to be charitable, again as we will see. The consequence of its being held to be charitable was that the Charity Commissioner's consent was required to a sale of the charity's land, which consent, in the event, they refused.